Hey guys, it's Dimitri. Let's be real, losing trades sucks, but it's all part of the game. What separates good traders from bad ones is how they handle the losses. Early on when I started trading, I used to take a loss and try to win it back right away, which led to even bigger losses. But once I locked in my risk management strategy, everything became much easier. Today, I'll show you exactly how I manage risk on every trade and how I handle losses the right way. And by the way guys, I just got back home, so if you hear background noises, it's probably my dog. So this is a trade I took last Friday on AAOI, and as you can see I got stopped out. So when it took the high of the first 5-minute candle, this is when I entered. And obviously if you haven't looked at my previous video, where I explained why my stop loss is there, but my stop loss was at the low of the day as always. So as you can see, it started off great. It went a bit higher than where I entered at. But if you look at the stock market last Friday, which was February 21st, you can imagine that in the afternoon, since the entire stock market was down, my position was down as well. So it ended up stopping me out and it continued to go down. If you've been following me for quite some time now, or if you've seen me trade before, you've probably seen that I get stopped out pretty often, but I still manage to be profitable. And in this video, I'll explain you exactly how I'm able to do this. Mistake number 1 is revenge trading. After a loss, many traders feel like they should win back their money immediately. Instead of waiting for a proper setup, they jump into another trade with no plan, often making it even worse. For example, let's say you lose $100 on the trade. Instead of reviewing the trade and moving on, you rush into a new trade with no real confirmation. That second trade fails too, and now you're down $200 instead of 100. Now listen to this carefully. The moment you feel like you have to take a trade to recover a loss, that is your sign to step away. Mistake number 2 is increasing position size to recover. Some traders think they can make back their losses quickly by betting bigger, but trust me, this is how accounts blow up. For example, let's say you normally risk 1% per trade, but after a loss, you decide to increase your risk to 5% or whatever it may be to recover. If that trade also loses, you're now down 6% instead of just 2%. And if it keeps happening, your account is gone. The key takeaway here is that your risk should stay the same, whether you win or lose. Don't randomly increase it out of frustration. Mistake number 3 is doubting your strategy too soon. 1, 2, or even 5 losses don't mean your strategy is broken. But a lot of traders take a couple of losses and suddenly change everything. New indicators, new time frames, new strategies, new setups, whatever. For example, imagine if you have a system that wins 60% of the time. If you take 2 losses in a row and you panic, you might change your strategy right before a winning streak starts. Of course, losses are part of every strategy. Instead of changing your system after a loss, focus on executing properly over the long run. Alright, so for my exact risk management strategy, the first step is to always risk a fixed percentage per trade. Personally, I risk between 0.5 and 2% per trade depending on the setup. This means even if I lose a trade and it happens, it won't kill my account. For example, if you have a $10,000 account, your average risk per trade will be 1% or $100. This keeps your losses small so you can stay in the game. The goal in trading isn't to avoid losses, but it's to make sure you're always controlled. The second step to my risk management strategy is to calculate my position size before entering. Many traders just pick random share sizes. I don't. I always calculate my position size before entering. I'm doing this using an online position calculator, which I'll show you how to use it in a second. Alright, so this is an online position sizing calculator. Alright, so I'll link this calculator in the description. For example, if we have $10,000 of capital, this here is basically the percentage of your portfolio that you risk. So we risk 1%. Buying price, let's say it's $11. Stop loss price is at $10. The maximum shares you should buy to respect your 1% risk is 100. Let's use this on a real trade. As you can see, it's extremely simple to calculate your position size when you have a calculator that's basically doing all the work for you. Alright, so if you go back to AAOI, I'll show you exactly how I calculated my own position for this trade. So the entry is the high of the first 5-minute candle, which is 30.70, and the stop loss is at the low of the first 5-minute candle, which is 28.42. So if we go into our calculator, 30.70, and our stop loss was at 28.42. If you submit, the maximum amount of shares that you can buy to respect your 1% risk is 44 if you have a $10,000 account. So as you can see, instead of guessing, I plug in my numbers and get the exact share size instantly. If you don't calculate risk before entering your position, this is basically gambling. And the last and third step of my risk management strategy is basically just to stick to your plan. And that means once you've entered the trade, you don't do any adjustments because you already have your stop loss and you should already have your first price target as well. Once I'm in a trade, I already know my stop loss and my risk. I don't move my stop or increase my position randomly. For example, a lot of traders will move their stop loss further down because they think the trade will reverse, but that just turns a small loss into a bigger one. So once again, your risk is set before you enter the trade, not during it. Now, I'll explain you how I personally handle my losses. Step 1 is, of course, to accept that losses are normal. Even if you're a great trader, you're still going to take losses. The difference between winning traders and losing traders is how they react to them. For example, if you have a $10,000 account and you take a $100 loss, it's fine because it's just 1% of your portfolio. But if you react emotionally, you could easily turn that into a $500 loss by revenge trading or increasing risk. A controlled loss is nothing. A reckless reaction to a loss is what ruins account. Step 2 is to review your trade. After every loss, I go back and ask myself, did I follow my plan? If the answer is yes, then I move on. If the answer is no, then I figure out what went wrong and I improve. If I lost because the trade setup wasn't actually clean, then I take note and I try to avoid similar setups next time. But if I lost even though I followed my plan, then it's just part of trading. Losing trades aren't failures, they're data points for improving your execution. Step number 3 is adding the next 100 trade mindset. One trade doesn't define your success. What matters is executing properly over 100 plus trades, or even 1000 plus trades. For example, if my strategy wins 60% of the time, that means that 40% of my trades will be losses. But as long as I follow my plan, I'll still come out profitable over time. The key takeaway here is to zoom out. Focus on overall execution, not single trade. Risk management is what separates real traders from gamblers. If you apply what I showed you today, you'll never blow up your account again. Drop a comment with risk if you want me to break down a live trade using this strategy. By the way, if you want to connect with other traders and see more of what I do, I have a free trading Discord where I share insights, answer questions, and discuss markets. The link will be in the description and feel free to join us. Also, I post daily trading breakdowns, setups, and insights on X at GenCorpTrading, so if you're not following me there yet, you're missing out on a lot of extra value. Make sure you check it out. As always guys, lock in, stay disciplined, and I'll see you in the next one.